Hi, my name's Sam and I'd like to welcome you to this presentation entitled An Introduction to Forex. I know there's an incredible amount of information, courses, get-rich-quick ideas and articles available online about Forex, so I'd just like to give you a little bit of my own background because you really don't know who is talking at you, who you're reading about when you are looking at some of what's available online. And trust me on that there are some real scamsters out there who are really lying through their teeth about what Forex is about and about how to trade Forex. So I'd just like to talk to you about my own trading career. I've had contact with some amazing retail traders who've made overnight huge financial amounts overnight. I'm talking sort of $400,000 or $500,000 liquid cash from a single trade overnight. I've also had contact with fund managers who make decisions on how to grow multi-billions of capital. I've worked with private Forex investment clubs. I've created training courses and done business with a number of brokers. I've also written an 80,000 word thesis on the Chinese stock market and its imminent collapse just before the major kind of bearishness that we've seen in the stock markets lately. I'd also like to add that I've never promoted a product unless I feel that it's absolutely going to improve, if not transform, the life of the person that I'm recommending it to. All that aside, an introduction to Forex. I welcome you to this presentation. I hope that you enjoy it and I know that you're going to get something from it. It's going to be short, sharp and to the point, and it's in 5 parts, this video. This series of videos, it's in 5 parts, so you can view the next video whenever you're ready. So a frank introduction to the Forex market. Okay, let's talk about what the Forex really is. Forex, or FX, foreign exchange, refers to the global exchange of goods and services in different currencies. Who are the participants of the Forex market? Well, let's start off with international banks, global institutions, global multinational companies, hedge funds and speculators make up the bulk of volume that's being traded on this market, in this market, the Forex market. Now, we also have now retail traders or individual investors who can trade Forex through a margin broker. We'll be talking a little about that as we move forward in this present part of the presentation. Forex is the largest financial market in the world. We've already stated that it's used by banks. How is it used by banks? Well, banks need to balance their reserve capitals. It's an unregulated market largely. There's no centralized exchange like in the stock market, and so banks will take out credit with one another in order to make these transactions work, and these are sometimes settled approximately 3 days after the trade has been completed, and that's known as the spot value. And that's also why Forex is also known as spot FX, because you're given a spot price and it's settled at the spot value. The largest financial market, what are the implications? What am I implying by the largest financial market? Well, the volume levels in Forex absolutely dwarf global equities, treasuries, bonds, commodities markets combined together. Some figures are quoted at being $2.5 trillion daily being traded, and that's up from 1.8 trillion about 6 to 12 months ago. So do you think there's an opportunity in Forex? Well, have a think about those numbers. Forex is a market of necessity. Money's traded from one currency to another as a part of the daily global trade. So what that means is it enables speculators to be able to get in on trends, follow trends. Economic news is reacted to, and so profits can be made from swings in the currency values. Since the 1990s technology boom and bust, the market as such, the Forex market, has been able to operate electronically. And that means that whereas in the past there were restrictions on the number of trades, a need for relatively large amounts of capital for traders to be able to trade, and mostly needing to trade through the interbank market, traders can now trade, in fact anyone can now trade, with the freedom to access and learn without the restrictions of a limited number of trades within a certain time period, and without the restriction of having to hold large amounts of money in a brokerage account. And we'll talk about how leverage works very shortly as well. So how is the Forex market used? How do traders and investors use this exciting and stimulating and highly leveraged market in the world in order to diversify their portfolio holdings? Well, Forex market is traded in pairs. Forex is traded in pairs, currency pairs. There are two currency pairs to any trade, hence pairs. So there's two currencies to one trade. You're either buying one and selling the other, or you're buying the other and selling the one. So traders will choose to buy or sell one or other of the two currencies, and then they will automatically do the opposite with the other currency in the pair. Trading is done directly through the interbank market, as I've already stated, which has no central exchange. Individual investors will tend to use a Forex broker who acts as a middleman between the individual investor and the banks themselves. So the broker will try to offer a quote very similar to the interbank market quote, and it's up to the trader to construct a trading strategy and a trading plan to be able to trade with the interbank market, essentially. We'll just finish that part of the presentation there, because I don't want to overwhelm you with information. This video is continued, and I will mention also that my website is privatefxclub.com, privatefxclub.com, and on privatefxclub.com there's a lot more in the way of articles, videos, information, free Forex training, and premium services as well for traders who want to make the most of their trading experience. Thank you very much for viewing, and do please continue on to the next video.